Hello, Warriors. This is Dale Pinker with TradeGateHub.com with your daily update. I think the feature that we should probably start with was the auto wreck that we had in the precious metals right here in silver and gold. And something I want to stress is that, say, for example, you see a car crash. After a car crash, you may not know, or you've been in one, whether or not you're injured or not because you're in shock. And when markets have these types of events where you have what normally would be a 2, 3, 4, 5 month range accomplished in a few candles or 24 hours, that to me is an auto wreck. Okay, so that's a market that has been damaged. And I know the old sayings, buy when there's blood on the street, and there is blood on the street in the precious metals after the last couple of days, but it shouldn't have come as a surprise because if you've been watching me and my commentary on TradeGate Hub, when we were up here and we were here, I always said the grand prize was to be able to take out this low and elect sell stops underneath. And, it's not only how it, what price a market gets to, it's how it also gets to the price. So with this type of action, what you have to do is you have to let the market reset and begin to fill out this range. There were all kinds of warning signals in the precious metals. I kept pointing towards what gold was attempting new highs and the gold shares were acting lousy. Actually, now they're not acting as bad as they could have with what happened to gold and silver. Here's Newmont. So even when gold was rallying, you couldn't get Newmont to go. So, now we may get the inverse starting to happen where the bullion, which was way outperforming the miners, is now way underperforming the miners. But just like everything, it takes time to heal. So you have to be patient and let things develop. And also what you have going on and what was happening here before this was that the yield charts, we started to get this turn in rate. So this was also part of the sell-off in gold. Okay, the sell-off in gold was this shot up that we had after the employment report, a little double bottom in the 10-year. And as I talked about yesterday, I think we're going to see it back over 148. And I can make a case for 210 on the 10-year yield. I expect that to happen well before the end of the year. People are talking the end of the year. I'm saying well before the end of the year. So yields are competition for all kinds of asset classes. And you would think that what it could really hurt is what's happening here in NASDAQ. So, NASDAQ is more interest rate sensitive than things like banks and financials. The financials actually like when rates are heading up, especially if the yield curve is steepening. So I think they're going to hold up better. I'm still looking for a correction this summer in the market. I think it could be at the minimum 10% in a hurry and possibly more. I'm hearing targets of 5,000 S&P and 18,000 NASDAQ. And we're starting to get a lot of calls that I can see us going to 5,000 in the S&Ps, but why not 3,900 first? Something like this. Why can't we have a move back down towards 3,900? Let's just take a look at the 4-hour here. So if I compress it, why can't we have something like this, which is going to take it down into that range down here? Let me compress it some more. Wouldn't be surprised if that gets us to this 3,900 level, gets you to 4,100. So, I'm still bearish. Of course, my conviction is being tested as the market continues to grind higher, but I still think there's a chance between now and not Labor Day, the equinox, the end of summer, near the end of September, for us to have a little a washout in the stock market. And if it happens under thin conditions like the silver did and the gold did, you could have big candles. Right now, all the candles that you have in NASDAQ are pretty orderly, um, pretty small. You look at the daily and it almost looks like a little grind, more about time, grinding higher, grinding higher. But I keep coming back to the glaring divergence. The first, if you want to know when we're really starting to do something wrong in NASDAQ, if he closes back under 14,900, which was a support level and wedge line that comes in there, your early warning signal in S&Ps is going to be, first of all, these moving averages, but definitely back under the 4370 level, 4390 level, prior highs before this recovery. So I do think that higher yields are going to have some impact on the large growth stocks. Another market that looks pretty negative to me, and it's amazing how quickly things change in this business. You look at the oil, and I had some unsuccessful top picks and some successful shorts, and did not catch this break. Actually, here I thought that maybe we were going to make one more move to new highs, but that was then. Moving forward, you have a descending triangle here in the energy market with a base at 65 and the high of the move was 77. So you're talking about a $12 formation in WTI, and a breakdown under 65 is going to get you 53. So I still think there's lower numbers coming in oil. That the commodity, and this is something I was talking about, once everyone embraced the inflation narrative, that we're going to have a pause in the inflation outlook. And that's what we're having here in crude, and really exemplified in a dramatic way in gold. See, so if you went and you just bought gold anywhere, you're going to see some pressure here. I mean, you look at some long-term stuff in silver. Why can't we trade back to this major breakout? This is where silver broke out after the COVID crash, and that's coming in with some weekly moving averages around 19 bucks. So this is an area of interest for me down the road, and that would mean taking out this low here at 2181. So see what happens in the coming months. If equities sell off and rates are going up, if rates are going up, it's very hard for anything to appreciate. Okay, that you'll probably have the dollar continuing to go up. There's a lot of skepticism. I know a lot of Elliottians that are saying we're going to see 85 in the dollar before we get the big bull move. And I'm saying, why not 95 first? So isn't that a possibility? It's what I've been talking about for a while. So higher rates and a stronger dollar are a wrecking ball for risk. So we'll see what happens here if we get this break. My preferred short is the NASDAQ because of yields, and we'll see what happens. Maybe we could even get back inside of this wedge. We have a throw over, and that's going to happen at 14.4. That's going to open up the door to much larger downside. And again, the dollar's giving me no reason to short it. I asked myself here, if I was long, would I reverse and short it here? The answer is no. So same answer I get in US dollar yen, same answer I get in yields. So the dollar, US dollar yen, and yields are headed higher, and that could put pressure on almost every market out there. If I'm wrong, then then we're going to have a reverse. Say, for example, the 10-year negates what happened last week, and we start taking out the 113 level, which, everything and anything is possible. But this to me was a pretty good signal, especially on a weekly basis. And look, we're getting some nice follow through this week. So talked about it last week. And here we are, we get through 136. I really don't see any resistance till this 148 swing number. See this pivot here, 148. So we get over 148, I think we'll be challenging the highs in a hurry and looking at a two handle. So if you think that crashes and flash crashes can only happen in gold or silver, think again, they could happen in other markets as well. And, you know, maybe gold's headed to 15 and a half before it's a good buy. So I just wanted to make the point that people see when they get a big smash like this, that they have to run in and buy the market. And I'm saying that you don't, you know, people don't come out of an auto crash and go out dancing the next day, that these markets have to go through a bit of a healing process and regroup and start making new lows with RSI readings not at 8, but above 30. So start to look for new lows in the gold and the silver with the RSI starting to hold above 30. And then you'll know that momentum to the downside is drying up, and it'd be a more prudent time to consider the long side of gold. I think that's pretty much what I wanted to cover today, because I know a lot of people wanted to go in and just launch at the gold, and I'm saying that I've done it. I know a lot of people that do it. It could work, but I'm saying it's prudence over valor. Is that when you have this type of crash in a market, usually a market has to go through some type of reset, and you don't have to be the hero and the first one in. And with that being said, I want to wish everyone a great Turnaround Tuesday. My Turnaround Tuesday candidate is NASDAQ up here. So you could short it here with stops over the high of the move, and that was 187. So you have about a 50 pip risk, and let's see if we could get some downside going in NASDAQ. And with that being said, remember, don't just count your pips, count your blessings. I'll see everyone tomorrow, and don't forget our interview on Thursday with Helene Meisner. And she's a lifer in commodities, even met her husband in the industry. So looking forward to speaking with Helene. I think Michael Venezia and her talk ponies in Sarasota. So Michael asked me to see if I could get her to come on TradeGate Hub. Ask and you shall receive, my trading warrior brother. Adios, everyone. Good hunting. And I'll see everyone